Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Bitcoin not zero, and we have a great episode for you today. SEC Commissioner Hester Peirce is our guest. She is back. She appeared on this show almost exactly a year ago to the date. It was March 1st, 2024. Bitcoin was trading at 52,000. Now we're around 98K. So much has changed in the markets, but also in the regulatory outlook. And we're going to get into it with Commissioner Peirce about what to expect from the SEC going forward. What they are going to talk about and work on, how companies, projects, issuers, firms can come in and talk with the SEC without fear that those disclosures are going to result in enforcement and regulation by enforcement. Commissioner Peirce has long been one of the most intelligent and thoughtful thinkers on the intersection between blockchains and capital markets. She's written or given over 400 statements over the years, many of them dissenting, but now Commissioner Peirce is in charge of the SEC's crypto task force and is in a real position to help the industry make change in a safe and innovative way. It is a great conversation I know you will enjoy. BIMNet Abibi is off this week, and before we get to that interview with Commissioner Peirce, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into it. Welcome to our guest, SEC Commissioner Hester Peirce. Welcome back to Galaxy Brains, Hester.
Alex, it's great to be back. You know, I've got to start with my disclaimer. My views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners.
I appreciate that disclaimer, and I noticed in your latest statement that you are a prolific writer, by the way. On the SEC website, I think there's more than 400 items when you filter by statement by your name. I'm assuming some of those are speeches. It was 20-something pages of 25 items, I think I saw.
Yeah, I mean, but the sad reality is that a lot of that is a reaction to not good things that were happening in recent years.
Yeah, an enormous amount of them are dissents, and maybe even not called dissents, but statements on something that you disagreed with.
Right. But so we'll hope we can get to a better place.
Well, it feels like we're on the precipice or even in the beginning of a better place. This is the piece that you posted last week on February 4th was called The Journey Begins. And we're going to get into the size and breadth of the journey. And I think you did a really good job showing how much complicated stuff there is. But I was also going to say, you made the point of explaining in this piece at the top that this was also your own views and not the views of the commission or your other commissioners, which I understand now requires a vote of the commission to actually formally say something.
It does. Yeah. Yeah. And so I think we're in a better place in the sense that there is real momentum to move forward. But figuring out how exactly to do that really does require all the commissioners to put their thoughts on the table and figure it out.
Yeah. And so I'm going to start with this piece. There's plenty to talk about. Before I get to it, though, I did want to point out you were on this show almost a year ago to the day, I think maybe about 11 months and 3 weeks ago. And the Bitcoin price was 51,000. The Bitcoin ETFs had just launched, I guess, forced by a court effectively to launch. The Ethereum ETFs hadn't been approved yet, which I think happened in June, if I recall, or maybe it was May, maybe late May. There were a different regime was in charge of the SEC, and obviously a different administration was in the White House. And how much has changed? I mean, in your mind, if you think back to a year ago.
I mean, it's profound, right? We're in a very different place, and I think that's a great thing. It's a chance for us to start over again, and really start taking a fresh look at things. It is in some ways, I mean, time flies, right? It's hard to believe that was only a year ago, but it also is a reminder that trying to get stuff done requires us to really move with alacrity, because otherwise time will fly by and we'll be in the same situation. So that lights a little fire to think that was only a year ago.
Yeah, you said that the crypto road trip on which your new task force at the SEC, which you're leading, you hope it will be more enjoyable and less risky than the road trip the commission has taken the industry on for the last decade. You go on to explain a bit about the history of the SEC, the recent history of the SEC's involvement in crypto. Maybe for the audience, could you paraphrase that, or like what was the commission's approach in the past, and how do you hope it will change?
Well, and people may think it's interesting that I said it will not only be more enjoyable but less risky. And I think the point really is that the approach that we've been taking, the road trip that we've been on, has been one that's been marked by just very erratic driving. And it's almost like we weren't sure where we were trying to get, but we were going to make the journey as uncomfortable as possible for anyone who was trying to follow along. And as a result, we ended up with lack of certainty, which everyone has complained about. But that also has had implications for us. We've spent a lot of commission resources on crypto regulation, but it's all been done through enforcement, or most of it, I would say, has been done through enforcement, which is a really expensive way for us to do things. There is a role for enforcement, but using it to write regulatory policy is extremely inefficient. And it ends up letting a lot of bad actors actually skate through and not get punished for what they're doing. And so I hope we can get to a place where more resources are being spent in the industry and actually building real things. More resources are being spent at the SEC and going after the bad actors. And so we'll be in a better place, I hope, for everyone.
Yeah, I tend to be of the view that if everyone is doing a thing, take like alcohol prohibition. You can make it illegal, but you almost certainly won't get rid of the thing. So I tend to think, whether it's like legislation, that if you create an unenforceable prohibition, it tends to just be bad law. Like if people are doing it anyway. And I feel like the prior approach, it pushed a lot of companies offshore that if there was a pathway, might have had better disclosures, been more overseen by relevant agencies. And instead, I mean, the main one that comes to mind is FTX, which was an epic collapse, by the way, not just in crypto, in the history of financial markets and capital markets. And I can't help but wonder if we had a more open pathway, in that case, I guess, for a trading venue and an exchange, that would consumers have also been better protected?
Yeah, I mean, I certainly think that's true, and I think that the prohibition analogy is an interesting one, right? Because you get all kinds of bad ancillary activity that arises when you're forcing something underground, essentially, and I think the approach of using regulation to sort of throw these random obstacles in the road for people who are trying to do things, in the open and legitimately, it makes it really difficult. Now, on the other side, I will say that a lot of people have said, okay, well, now we're in a new world, so we can do whatever we want, and we're going to just, go out there and sell all kinds of garbage things, and we're going to lie about what we're selling, and no one's ever going to come after us. And I think that is definitely not the message that people should have. I think people need to realize that what we're trying to do is we're trying to conserve our enforcement resources so that we have them to go after the people who are doing bad things, whether that's us at the SEC or another regulator.
Absolutely. And you made a point to say this in your piece, The Journey Begins, which of course we'll put in the show notes. You said that one of the reasons the U.S. capital markets are so robust, efficient, and effective is that we have rules designed to protect investors and the integrity of the marketplace, and we enforce those rules. We do not tolerate liars, cheaters, and scammers, which I love that you make the point. Obviously, investor protection is one of the key pillars of the SEC's mandate, but also I think there are many people who did comply with the rules or tried really hard to, vague or oppressive though they may have been or felt that they were, and instead were being competed against by people offshore not complying, and seeing, some of the actions that have been taken by the commission going after good actors, although they may have had good reason to also have, an enforcement brought against them. But while truly bad actors getting a free pass or sort of falling under the radar, and I've always said that the industry is not asking for a free pass. We want bad actors to get taken out, be enforced against, be Do you think the different approach that you describe is going to sort of do both? Like,
I mean,
or
that's
that's the
certainly
goal?
my hope. And I think one thing I'd really like to see change, and I'd like to see this change immediately, instead of punishing people who make disclosures, because those are the projects that are going to get the most, it's easiest for a regulator to see a project that's making disclosures. So the incentive is actually not to make disclosures in a regime where you're just seeing, every enforcement action after enforcement action. I want to be in a world where we encourage, there are incentives for people to make good disclosures, to explain how the project works, to explain what the project team's stake is, and what their likelihood is of achieving the plan that they put forth for their project. I want there to be more disclosure, not less. And so that, I think, is another piece of this that we lost out on in the previous years, is not to have incentives for disclosure, but just to say, yeah, everyone go underground.
Yeah, there were a company that had an enforcement action brought against them, or actually maybe even a Wells notice sent to them, which I won't name, just because I'm not trying to say any particular one, but they had said that they actually had come in and talked to the SEC like 10 or 12 times and explained to them everything they were doing and tried to be very upfront, and then instead had that information used as a justification for an announcement, or telling the project that they might have a litigation case brought against them. And that's the incentive that you're talking about, the misaligned incentive.
It's not only did we discourage people through things like that from coming to talk to us, but we discouraged people from telling the public, from telling buyers what they were getting. And so we really, I mean, the whole beauty of this technology is that it really lends itself to everyone can see the same information, right? Everyone has access to the thing on the same terms. And so we should be using that technology to further the goal of more transparency, more equal access. Instead, we've ended up with some real distortions. It's not only that projects don't want to make disclosures because they're worried about what that will cause, but they're also doing strange things where participants don't get the advantage of participating. Only the project founders do, because if the participants do, maybe that'll attract more attention. Or you end up with airdrops not happening in the US because we don't want to have US involvement, and so you end up with US people worse off. I mean, there are a lot of very weird distortions that have come about, I think, largely because of this the regulatory framework.
Absolutely. And on that point, the issuance, which, by the way, I think for the audience, I and didn't make this explicit. I've been reading some parts from your piece, The Journey Begins, but I do want to go the main sort of meat of that. And you said, now that those disclaimers are out of the way, gruff disclaimers, you said, some of them not actually disclaimers, in my opinion, just interesting commentary on what was and what might be. But you then go into a list. You say it's not exhaustive, nor do I present it in order of priority or order of expected completion, but this is stuff that we're looking at. And I'm not going to read it in order because I want to stick with your issuance point here about the distortions there. So the third one, again, not in any particular order, he said coin and token offerings. The task force is also thinking about the possibility of recommending commission action to provide temporary, prospective, and retroactive relief for coin or token offerings for which the issuing entity or some other entity willing to take responsibility provides certain specified information, keeps that information updated, and agrees not to contest the commission's jurisdiction in the event of a case alleging that fraud in connection with the purchase and sale of the asset. So that is the disclosure regime you're talking about, is the idea that you may recommend that to the commission, but that's the concept, right? It's a disclosure-based regime.
Yeah, and this is something that, I've been playing around with this concept of a safe harbor of some sort for a long time now. And part of the reason is that I've talked to projects and they really want to have some sort of framework within which they can get tokens out to the retail public, because the whole goal is to get network effects, right? To get people using this. And so we want to have some sort of framework for doing that. Now, again, I'm not wedded to the token safe harbor framework that I put out, but I think something like that could be useful. And so I think I should underscore on all of this. We are really looking for input. If people have great ideas, get them to us quickly. There's an advantage getting them to us quickly because we really do want to be able to move along with some of these things. We're looking at things what can we do in the short term? What can we do in the medium term? What can we do to sort of tide people over until Congress maybe comes in to do something, or until we come in with regulations that will take longer to do because we got to go through notice and comment. We have different tools that we can use, and we're willing to use them. So, we welcome ideas.
And I'll post like I said, the link, but at the bottom of the document, you do explicitly say, please do engage with the Crypto Task Force. You can literally email input to crypto@sec.gov. So, you're calling for that. We're happy to amplify that. On that point of that you want to move quickly, I wanted to ask you and we'll get into more. There's a bunch of other interesting stuff I want to ask you about from the content of the letter and your prioritization, and even on issuance. I want to ask you about by the way, everyone should read Commissioner Peirce's Safe Harbor proposals 1 and 2. They're on GitHub, which I love.
Well, and actually, someone iterated on I think it was the second one. So, people should take a look at that iteration too. I think, and things have changed, right? Those are pretty old. So the landscape has changed. Tell me where I'm wrong. I love hearing people tell me that I'm wrong about things too. So we need to get this right. And the only way we can get it right is if we have lots of back and forth. And hence, that's why we put it on GitHub, so that people
love that. Very conducive to edits and forking and comments. Sticking with the issuance for a question, is there a possible path for regulation and with a new, whether it's the safe harbor or some new disclosure regime, or I don't know, widening the existing disclosure options that people have for securities to include like a more robust taxonomy? Like if you're a stable coin, it might be this type of disclosure, or if it's an L1 gas token like Ethereum or something like that, it might be this type of disclosure or whatever. Is that one way you guys might be thinking about this?
Well, I think the first thing as I say, we're trying to work on things, in parallel, not one after the other. But I think one thing we need to do is push stuff out of our jurisdiction. I mean, if it's not in our jurisdiction, make it clear that we think it's not in our jurisdiction. And so, yes, for things that are in our jurisdiction, I think you're right. Maybe we need to do some of that taxonomy and think about things differently. A stable coin is very different than an L1 token like ETH or Bitcoin, right? So we have to think about those things differently. And I think that will play into the disclosure. There might be different kinds of exemptions for different categories.
Right, where some doesn't make sense, and this one, it does make sense. You did, and again, you said it was in parallel and not necessarily concurrent, but the first thing that you mentioned is security status. So the status of crypto assets under the securities laws is fundamental to resolving many other questions. The task force is working hard to examine different types of crypto assets. And I think it is fair to say that if something is not a security, it probably is not in the jurisdiction of the Securities and Exchange Commission, right? I mean, that's pretty straightforward. But the prior chair of the Securities and Exchange Commission had said that perhaps the vast majority were securities. And I think it's almost that determination and that question is sort of the foundation from which everything else flows. Because if it's not a security, is that hard to untangle? You talked about disentangling a lot of the stuff that had previously been done. I mean, is that an easy or a hard question, figuring out if something is a security in your mind?
Well, I think what we want to do is make it an easy question, because you can't live in a world where we, the regulator, and people out there in the world trying to do things have no idea how to even answer that question. I do think there's some difficulties. I think maybe we've made the question more difficult than it needs to be. And part of that is just sort of this legal ambiguity around, are we talking about the token, or are we saying that the token was sold in a transaction that is a securities offering? I think there might be a lot more agreement that some of these tokens were sold in transactions that were securities offerings, but that the token itself is not always and forever dragging that investment contract around with it. And so I think if we can get some clarity there, it would be helpful. And that is something that we're trying to do early on. Some of this, again, it's not only our efforts that we're working on, but we're also trying to work to help Congress think about these issues. Their legislation, the direction they decide to go is their decision. But if they need technical assistance from us, we're happy to provide that. So I think some of those questions may end up being resolved in legislation as opposed to by us. But to the extent that we can say already the securities laws just don't cover this, I think that's a good thing.
Yeah, and this was the sort of second thing you said in this list was scoping out, and you've talked about that a bit. I wanted to ask, some things could be I don't know, maybe it's a collectible like a baseball card. Well, I'm not aware of any U.S. federal government regulator that regulates baseball cards. Maybe there's like a fair trade practice kind of thing or whatever. I mean, fraud is still fraud. I mean, there are federal crimes, but a financial regulator doesn't currently. But there is this question, and I know it's as Congress has proposed in, like, say, the FIT 21 bill that was passed by the House last year, proposes a bifurcation between the CFTC and the SEC. And if something's a commodity, it may, in that proposal, it was going to be regulated by the CFTC. But if it was a security, rightly so, it would be regulated by the SEC. When you scope out, some things could end up elsewhere, like the CFTC. That bill proposes that spot crypto markets might be regulated by the CFTC. But I noticed that the CFTC doesn't currently regulate any spot commodity markets. It's the Commodities Futures and Trading Commission, not the Commodities Spot and Futures Trading Commission, right? They don't regulate spot oil markets. Indeed, they can't, because they're global. There is no central, it's not like it only trades on the New York Stock Exchange or in an ATS where they can, hone in on it. I know this is a sort of out. I mean, this is more of a CFTC question, but like, how do you think about where it might land, or is it, would the CFTC and SEC work together? Like, how do you view that?
So they have some fraud authority in the spot markets, but the kind of authority that people are thinking of for crypto would be different for the CFTC. And I think if I say the tokens, many of the tokens, and again, this is not a blanket statement, because you can design a token so that it looks just like a stock or a bond, right? So putting those aside, but the tokens that might be at the center of an investment contract, if I say those aren't SEC stuff, and the platforms that trade those, therefore are not regulated by us unless they also trade securities. If I say that, then that is something where someone else might come in and say, hey, well, we want those platforms to be regulated somehow, somewhere. And they might say, yeah, well, why don't we give that authority to the SEC? Or they might say, let's give that authority to the CFTC. And I think either way, we're happy to do what Congress tells us to do. We're happy to work with the CFTC on things. I think one of the challenges that Congress will face in thinking about this issue is that we now think of these things very siloed, but eventually you're going to probably want to have different things trading side by side on the same trading platform. And so that's something that we all have to grapple with as well. And we can all come to different conclusions about how much regulation we want in this space. I might come to a different conclusion than others on that. I tend to be, as I made clear in that statement, someone who thinks that, hey, people are adults, they can make their decisions. And so we don't necessarily need to slam a regulatory framework on everything. But I think a lot of people would feel comfortable having these trading platforms fall into some kind of regime. And, where that is going to be, I don't know.
Yeah, I mean, there was a bipartisan majority voted for FIT 21, and it included that. So I think that's fair to say some people want that. And just to reference, you did make clear your view, and you have plenty of times on even just the role of government, broadly speaking. But I did love this quote, and this, of course, came after many other disclaimers, like saying you don't tolerate liars, cheaters, and scammers. But you did say, I highlighted this quote, In this country, people generally have a right to make decisions for themselves, but the counterpart to that wonderful American liberty is the equally wonderful American expectation that people must decide for themselves, not look to mama government to tell them what to do or not to do, nor to bail them out when they do something that turns out badly. It does feel like there's been, well, I mean, this is a government political philosophical question, right? I mean, this is the thing that whole ideologies are built around. What is the role of government? And it feels like we're swinging the pendulum a little bit, and I think that is certainly, for how far it went in one direction, at least with our industry, I think that's quite warranted. But I thought that was a remarkable
But
statement.
I think another piece of that statement, people might think that statement is only directed at people who are going to buy a particular asset, but it's also directed at entities that might want to be involved in crypto or another industry. If you make bad decisions, if you're over leveraged and you're doing stupid things, don't expect that you're going to get someone to come in and rescue you. If you fail, you fail, and next time do better. So I think that is a really important message too. We're not setting up the next set of too big to fail institutions that the government is going to come in and build a safety net for.
I love that you said that, because in the depths of the post FTX market infrastructure and market collapse in crypto, when we're all licking our wounds and Bitcoin opened the year in 2023, I think it's 16.5. That was one of the things we said, like when the great financial crisis happened, Fannie and Freddie were effectively nationalized, right? Like the big banks, there's a famous book, Too Big to Fail, right? It was about how, and I actually think that's had incredibly detrimental long-term effects on the banking system. I know you're not a banking regulator, this isn't a banking discussion, but I do think it was, for all of the failures of crypto, it did pick itself up by its own bootstraps after that. And Bitcoin didn't get a bailout.
Yeah, and I'm not a banking regulator, and there's a reason that I'm not. I love the capital markets because these markets are made up of lots of different actors, none of whom needs to stay around, right? They're here, and if they make good decisions, they stay, and if they're not, they're out, and there's no government insurance system to back them up. So I think we need to carry that over into crypto world.
Yeah, there's no federal Bitcoin insurance corporation. Although I do know some interesting companies offering Bitcoin custody insurance, but that's a different conversation.
Again, if it's private, go for it.
Yeah.
But we just need to keep it private.
You mentioned earlier an interesting point about the venues, and even if there is a bifurcation, you could foresee a world where you'd want to trade crypto securities next to crypto commodities, and a bifurcation might make that tricky. So hopefully, if we get to a place, you wrote about this, you talked about the special purpose broker dealer license, which is a novel. I don't even know, by the way, was that invented? Did new licenses, when the SEC comes up with them, do they need to be you don't need statutory authority to invent a new license, right?
Yeah, we have a lot of authority to do kind of exemptive type relief that allows for the creation of new types of entities. I think that this is going to be one of these really difficult issues to work through, because there's a lot of real animus toward the SPVD regime, because it basically hasn't been effective.
Well, I do think, just for a data point from a researcher standpoint, I believe there's only 2 entities that have that license. And for a very long time, there was just one, and I don't believe had ever traded. There was no trade. No trade had actually occurred there. You mentioned in this point that perhaps that license or the
categorization. It's really a temporary no action statement is what it was.
Right. And so you were saying maybe the statement could be expanded to cover BDs that custody both securities and commodities, to sort of your point. But there are broker dealer licenses. Why not work on those and allow existing broker dealers to just handle cryptos?
Right. Absolutely fair point. And that's definitely on the table as well. We're just trying to figure out what the best approach is. I think, again, there are some issues that we're going to need to address around SIPC. So I talked about not having government insurance, but there is a program that does work with broker dealers to make sure that customer assets are protected for customers. And so that is it's called SIPC, and so that's something that we have to make sure that that customers understand what is covered and what is not covered. And so I think that would be something that we have to think about, and we've got to think about the health of the broker dealers. And so, yes, it's absolutely on the table. We invite people to help us think through, should we just throw out the SPBD? Should we iterate on it? Is there something else we can create? Or do we just want to work with our existing broker-dealer structure?
Yeah, it makes sense. Just like you might not want to, I mean, let's say you're a modern day crypto exchange and we get a lot more clarity, and you end up, as it is today, you end up with things that eventually are a mix of crypto asset securities and commodities. From a user experience, obviously, like, I don't want to have to like only trade my commodities here and only trade my securities there. So I think your point about figuring out, at least reconciling that, whether it's through this vehicle or some other vehicle, that would be a terrible user experience, let alone if something were to start as a security and later be determined to be a commodity. And now it's like, well, now I get kicked off. And I don't.
Yeah, I mean,
I don't
the
want that.
ingenuity of the industry in creating a smooth user interface that really doesn't have to involve you in figuring out which entity you're dealing with. It can be seamless. So I don't doubt that people can figure out how to do that. I think the concern is just making sure that people know what to expect if that broker dealer were to fail, for example. What would happen to the customer assets sitting at that broker dealer? They need to have some expectation about some understanding about that. But I do invite people to think about what the existing rules are, and think about how we should integrate this stuff in. Frankly, what are broker dealers already doing with other kinds of assets that aren't securities? What can trading platforms already do that are registered with us already do with other kinds of assets that are not securities?
Yeah, that's fair. You're right. I guess it would be the legal entity, the broker dealer, not necessarily the front end UX. So I appreciate that point. And I want to ask you too about, well, gosh, a couple more that I've got. The custody rule. I think you said one of the bullets here was custody solutions for investment advisors. You'll work with them to provide an appropriate regulatory framework which advisors can safely, legally, practically custody client assets themselves or with a third party. Love that. It's been quite tricky. I know certainly for newer digital assets, especially, there might not be a trust company that even does custody them. But also the custody rule itself and qualified custody as a concept, not even just for crypto. There was, I think it's fair to say, an expansion of the custody rule last year. Was that last year?
It was proposed, right? It never was
proposed.
Okay,
so it hasn't been
finalized. Buzzsaw of opposition from crypto, but also from lots of different places.
Yeah, I know that a lot of managed funds and RIAs opposed some parts of it, particularly for commodities and for private investments, and I think even like venture under the proposed rule, where the security is a PDF, effectively still, right? It's not actually issued.
Yeah, it's a really complicated area, and so we have to be careful. I mean, I think there's some legitimate call for modernizing our custody rules for investment advisors, but it's a big project and requires a lot of input.
I'm not sure if this one was mentioned, but I also wanted to ask you another, while talking about the proposed custody rule, there was another very fascinating, and I guess, by the way, these count as rulemaking, that was comment periods were created. The exchange definition was a really fun one. I actually wrote Galaxy's comment letter to the SEC, dear Vanessa Countryman, Secretary of the Commission. And I remember this was really interesting broadly, and maybe you have more context, and it's been a while since I looked at this, but it would effectively expand the definition of an exchange. It is the Securities and Exchange Commission, right? The SEC does regulate like the New York Stock Exchange, right? And ATSs, right? Alternative trading systems. So, which is great, because we also want to make sure things like, when you send an order to the exchange, it gets properly handled and all of that stuff. That's great. But it expanded the definition of what would be considered an exchange to include communication protocol system, which is a very broad and vague term. And I remember the first round of comments were a deluge of crypto people being like, what do you mean by this? Does this include DeFi? And we actually got back an extremely well-written, a bunch of clarity and I don't know what we call it, a response from the SEC, and then a new comment period, reopen the comment period, or that was filled with clarity. It just seemed really bad. And so then you got another wave of comments from people like me and others saying that this would basically include entities that can't possibly comply. Like, how does a smart contract submit a filing on a regular basis? Is that something that, did that ever get finalized? And also, is that something you guys are gonna think about?
Yeah, it didn't get finalized. I mean, at the time, it was, yeah, you're right. The second round really gave clarity. It was like either you get out of the U.S., you shut down, or you somehow centralize and register with us. So it really did raise a lot of concerns. It did not get finalized. I think, as with many other rules inside and outside crypto related things, we have to look at everything that's on our agenda and decide what to do with it.
Even when the clarity did come occasionally, not just from the SEC, but even the IRS and the broker rule that they have, their thing, they did actually a great job explaining their position in the IRS broker rule case, where they talked about DAOs. I mean, they had clearly done their homework. And I think even here in the response to the first round that the SEC put out, it was somewhat detailed.
It was definitely detailed. I still had a lot of questions, along the lines of what you just said, like, who exactly is it that you expect to register?
Right.
I'm trying to figure this out here, like, because people need to know if they're obligated to register, if they're, participating somehow in a DeFi protocol, right? What is that? Is everyone going to register? I mean, what does that even mean? So I think, yes, it provided more detail, but it raised a lot of questions as well.
It did. And you're right. It was a lot of talking about the issue and saying broad statements, but actually, like, it'd be great if you just came out and said, well, if a DAO has this threshold or whatever capabilities, like, I think the one that I focused on was that I said we didn't offer comment on a desire to capture decentralized marketplaces, which could functionally be controlled by their code developers, right? Like, basically, if it's decentralized in name only, like, I'm setting that one aside for the moment, really. Like, but what if nobody does control it? I mean, a good example is Uniswap has no meaningful admin functionality. It really can't be stopped. I mean, the old versions of it still run live on Ethereum. Like, when they release a new version, they have to release a new version. People can still use the old version. They can't even take it down. How? And
yeah, I mean, I don't want to talk about any particular DeFi protocol, but I think that is something that really frustrated me, which is we always put purported in front of decentralized, and often that is right. Like, often you're right, it is decentralized in name only. But we really couldn't, it seemed, as an agency, grapple with the notion that you could actually have something that is peer-to-peer, person to software protocol that really does not involve an entity. The whole point is lack of intermediation. Like, that is the goal. And if you have that kind of situation, the whole regulatory framework that is built around intermediation just does not work. So we've got to figure out, what are we going to do about that? Are we going to just recognize the fact that maybe there's some pieces of the world that can be unregulated? I mean, that's probably where I would come out. But if we're going to come to a place where we're going to regulate that stuff, we better do it in a way that does not prohibit people from sitting down and writing software code.
I agree. And I love the idea. It's something I've said to policymakers and lawmakers in general. There's no lack of desire for smart regulation that is progressive and accepts innovation and protects consumers. We all want that. But you do kind of have to reckon with the reality that, decentralized systems they're here to stay. Like, even Bitcoin is the iconic example, is here to stay. There was a congressperson who I won't name or anything, but I mean, when the terrible events and blow up at FTX was happening in some hearings, they were talking about it. And someone was like, should we just pause crypto until we figure this out? And it's like this iconic.
You can't turn it off.
It goes, along with the same lines of, creating an unenforceable prohibition. Like, you just, like, let's try. I'm a fan in government of at least acknowledging the reality that we're dealing with.
Yeah.
and trying to find a way there.
I mean, I think that the reality too is that most people are not probably going to be DeFi, they're not going to be down there they're going to want to go through an intermediary. And so a lot of this, I still think, is going to be intermediaries with a lot of the back end stuff being decentralized. And so a lot of the concerns around investor or customer protection, I think, will be practically addressed by the fact that there will be someone in the middle.
Yeah, I think that's right. I'd be remiss if I didn't ask about particularly two others, and then I've got a couple of final higher level questions. But I've got to ask about the exchange traded products. Obviously, the Bitcoin ETPs as a single complex is the most successful launch by AUM growth, basically in ETP history. Huge demand for those, and the Ethereum ETFs we're off to a little bit of a slow start, but also starting to see good demand. Clearly, the market likes these products. There are questions. I think the two main questions, and you reference both of them, so obviously you're well aware of them, are can proof of stake single asset ETP like Ethereum, can the ETP stake some of the coins that they have, which I don't know the rule where the yield would go, but there are some in Europe that do this. And maybe they could pay some of the yield, the rewards earned from the ETP's supply staking back to the shareholders. I don't know. And then the other one is in-kind create and redeem. So, creating ETP shares with Bitcoin instead of just with cash. These are big asks. To be honest, they're both quite complicated, more complicated. I actually think in-kind create and redeem is maybe a little more complicated than staking, but you've said you're going to look at the two sort of main ones, but also you left it open for or other things to amend these statements and things. I mean, I'm not aware of ETPs that pay dividends in the world. Are there? First of all, maybe there are, like outside of crypto, like in the US.
Yeah,
Like,
I mean, I leave it
how
to,
novel would that be?
I leave it to industry to try to figure. I mean, this is all a little bit novel, right? So I think I leave it to industry to try to figure out what that might look like. But we're certainly happy to engage with people on those things. There's still, if you're going to have in kind, you still have to think about the custody issues. How can a broker dealer be involved in this at this point? So some of these things have to be resolved simultaneously, or we have to figure out how to do this. And again, I think the point is we're willing to talk to people. We expect the people who come in to talk to us about this to have done the hard thinking about how this is actually mechanically going to work and what does this look like, and give us the analogs in the TradFi world to help us think through these issues. That's typically how we iterate on things, and we look to precedent to see. But I think the point is, let's try to figure this out, because I've heard from people that by having those limitations, the products don't work as well as they otherwise might. That's what some people have said. So I'm at least, wanting to hear about that.
It's very refreshing. And the other one, it's been a personal hobby horse for me. And I know the blockchains have been trying to bring value to the capital markets for years. I think broadly, a decent catch-all for this is the word tokenization. You have a section here about clearing agencies and transfer agents. But you said we will continue to work with market participants interested in tokenizing securities or otherwise using blockchain technology to modernize traditional financial markets. We at Fidelity, when I led blockchain research, we looked at this extensively. We love the idea. We're not sure if it would be good, but we really weren't ever able to try. Do you think people are going to be able to try this stuff in the next few years?
Yeah, I mean, I think it'll be interesting to see what people come in with. And again, maybe this isn't a good application. But I think that there are enough people who are interested in trying. It seems to me that a lot of the large financial institutions have been running experiments, at least, have been thinking about ways that this might work, or they've been running experiments outside the US. And I just want to say, hey, why don't you come do that here in the US?
Yeah, I think that's great. I think it seems to, I mean, there was this great paper that the DTCC put out, I think as early as 2015. I always forget whether it was 15 or 16. It was a while ago. A very forward-looking paper about distributed ledger technology and how it might disintermediate them. And when it boiled down to it, they're basically a giant ledger, and maybe they should build their own lest they become unnecessary. And I always tell this story about the paperwork crisis on Wall Street, and I know you know this story too. And basically, it was totally disintermediated and direct. The broker dealers would settle directly with each other bilaterally, and that's sort of the state of. I feel like humans, we prefer to work directly with somebody, but sometimes it's not feasible, particularly at large scale. And so that function of trade settlement and securities settlement was centralized, but it's like maybe now we do have a technology. I know you don't know whether it will work, nor do I really, but is that like one of your sort of hopes for capital markets, that there might be some plumbing infrastructure here?
Yeah, I mean, I think to me, it's at least interesting to explore whether we could make the plumbing more efficient. I think anyone who is in this world or regulates this world thinks about events like the paperwork crisis of the 60s and wants to make sure that kind of thing never happens again. But you realize how important that plumbing is. And so I think it would be interesting to see people experiment and think about ways that the technology could help there. Again, maybe it doesn't work. Maybe it gets jettisoned and people say, no, it's just not the right application for it. Fine. But let's at least try it. And I think, or at least let people try it. Because I think really what has happened is that anything that had anything to do with crypto or blockchain just got a very cold reception here. Now, that said, there's been some work done with money market funds, for example, and thinking about how money market funds could be put on blockchain. And so there has been some experimentation, but I think there could be other interesting experiments. So we'll see where it goes.
Let me ask you about the Presidential Working Group on Digital Assets. Obviously, the president has made digital assets a priority for the administration. The executive order that created the PWG said as much, and had a whole list of protect and promotes, from self-custody to the ability to write software. I thought it was extremely progressive and positive. That working group, of which the SEC is part of, I guess and as well as other federal agencies. This is an internal government working group. It's they have ordered the constituent members, which include the SEC, CFTC, Treasury, Homeland Security, a bunch of others, DOJ, to deliver some work product, right, on timelines that are pretty aggressive. So by my count, 30 days after the order was signed and the PWG created, the members of the PWG, of which the SEC is one, are required to identify all regulations, guidance documents, orders, or other items that affect the digital asset sector. That's coming up. That's February 22nd. I believe. Maybe it's the 3rd or the 1st, depending, 23rd or 1st. That first step is a cataloging, and I sort of saw your statement here. The journey begins as a sort of a stab at throwing out what that catalog might entail, but the commission has to actually deliver this to the working group, correct? Is that what you guys rate when you wake up and come into the office in the morning? Is that what you guys are working on most urgently?
Well, I mean, I think we're working on lots of things most urgently, but certainly trying to figure out what do we have to deal with, where are the regulations that we have to deal with is something that's foremost on our minds, and trying to pull together that list. Of course, that's important. But what I appreciate about the working group is this idea of let's sit down holistically, think about the list of regulations that's potentially implicated here. In some ways, it could be our entire rule book, right? But really, you want to focus, and that was what I was trying to do in that statement, focus on the areas where there are particular pain points. And then we'll be able to better allocate our resources to then identify the problems with each of those and solve those problems. So I think it's just a desire to make that process as efficient as possible.
I love it. And I know that you and Commissioner Ueda and the commission in general know a lot about a lot of these issues. You've been writing eloquently about them for years and speaking up about areas where the commission might be taking the wrong approach in your view. So it doesn't surprise me, but I'm kind of interested to see if, it's like the Department of Homeland Security, what do they come up with, and by the way, you have done a great job over the years being transparent, calling for more public dialogue and transparency. my read, I don't know if you know or even could say, but is that some of probably this final report that goes to the president from the PWG becomes public. It's not clear to me that these constituent agencies providing the cataloging, then later the recommendations, that actually becomes public. But I'm kind of interested to see like what these other agencies, I haven't known that Homeland Security has significant digital asset items on the table, but I can't wait to find out.
Well, and I mean, I think people should spend maybe their time now thinking about if they were doing that job, what rules would they identify? I'm particularly interested in my agency because I want to figure this stuff out. So if you have ideas, anyone listening has ideas, please let us know where those pain points are. We do hope to have some opportunities for public participation. Certainly, write us. We're happy to take that written feedback, meet with us. And then we hope to have some roundtables where people will be working with the public as well.
The president has said that it's a golden age. I wrote a report right after the election outcome was clear saying entering the digital golden era, a little bit of a pun. I guess maybe the last question is you talked about how some of the approach the SEC took maybe pushed people offshore, or even that you said how the banks might have already been trying this in other countries because they couldn't really hear. Should people come back to the U.S. if they left for these reans? Or is crypto
absolutely.
in the U.S.?
Absolutely, I think so. If you want to do good things, come back here. If you don't, please don't.
Yeah, we don't want to have you.
But
you're still going to get caught if you do bad things.
Right. But no, I definitely want people to come here, and I think the best way to do that is to come here and help us think about what the regulations should look like. We want input from lots of people, so that's my message.
It's a real chance people have, and the SEC has, and you and Commissioner Ueda and nominated Chair Atkins to shape what could be decades of important financial policy in the future. This is the future of finance, as they say, is it not?
It's the future. I hope that we can do this well. It's definitely a daunting task, but one that I think all of us are excited to get started on.
And lastly, we are very happy that, and I think your statement shows that you do not intend for the SEC to be a secret garden any longer. I love that you talked through your thinking here with us and on Bloomberg TV and in the statement before we get a vote from a commission on an official position. And I'm referencing a great piece that you wrote, I think back in 2018, called The Secret Garden, sort of criticizing the lack of transparency and the agency. So keep it up. We'll always be interested in hearing what you have to say, Commissioner Peirce. And thank you so much for coming on Galaxy Brains.
Well, thanks, Alex, for having me.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, SEC Commissioner Hester Peirce, and that great conversation. Man, we have a lot to look forward to. We're no longer on the back foot, but now we got to step up and deliver as an industry. And that's a great opportunity, but also a big responsibility. So everybody email crypto@sec.gov if you have recommendations for the SEC on how to approach these complicated issues. And everybody have a safe and happy weekend. We will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.